Hello and welcome to Move or Improve with Debbie. Thanks for joining me today. To get back to a topic that I've talked about quite a bit, remodeling to age in place as a possibility for a choice that you might want to make instead of moving. Or if you've moved and you want to redo your interior, how do you get the money to do that? And so I've asked Paul Denmon with First Heritage Mortgage to join me today. He's Vice President of Construction and Renovation, and he does 203K financing. And so he really knows his stuff. So I've asked him as the expert to join me today. He does work with first-time home buyers and celebrities and sports stars. But since the mid-90s, he's been originating 203K loans, and he's going to talk about what that is. But he was one of the first loan officers to embrace this program in its current form. And he also helps customers with conventional renovation loans, or what is known as a home style loan, and a construction loan that meets the needs of consumers as the market has changed over time. And he's a top 10% producer, and he's done millions in refinancing, financing, construction loans, all kinds of stuff. So I'm very pleased that he's able to join me today. Welcome to the show, Paul. Thank you for coming.
Thank you, Debbie. Thank you for having me.
No problem. Well, now let's assume that it's time to remodel and you want to do your kitchen or your bath or make other aging in place revisions on an older home that maybe doesn't meet those criteria. Or you want to renovate for an accessory dwelling unit for mom or dad to live in. So we're going to talk about what options might be available to finance that kind of project. I know the National Association of Realtors and the National Association of Home Builders have said that many contractors are doing projects that are in the $100,000 plus price point because the older homes that we have just aren't adaptable to this without doing quite a bit of work. So, Paul, for people who are unfamiliar with financing a big remodeling project, talk about what kind of financing is available for them and the pros and cons of each option. What type of project or renovation is each one best suited for? And then we'll get into the nitty gritty after that. But just a generic type of overview would be helpful.
Sure. So consumers these days have a lot of choices. That's the good news. In the current state of mortgage banking and banking in general, you have lots of options. A very common option is just to pull the cash out using a refinance. And instead of just refinancing your home, you'd refinance more than the money that you currently owe and pull some cash out of your home. Second option is the home equity line of credit. We also call it a HELOC. And the home equity line of credit is also great when you have equity in your home, but don't necessarily want to get a whole new first loan, or you like the rate on your current first loan, and it's great for the smaller projects. The other option is a renovation loan, and we'll get into the details as you said. And then the fourth possibility would be a construction to permanent loan, which is a little more involved.
So what is this home style loan from Fannie Mae? What is that all about?
Sure. So Fannie Mae, it kind of piggybacked on the FHA 203K. And basically, the gist of the Fannie Mae program is it is letting you refinance, pay off your current existing home loan if you have one, and then also financing a renovation or remodeling project. But the key to it is, unlike the cash out and the home equity line, is it's looking at the future value of the home once the project's done. So the appraiser's taking the plans and details that the contractor's providing and determining what they think that value would be after it's completed. And that's what the lender's allowed to base the home loan on.
That's very interesting, and it's a good option to know about. And obviously, it sounds like you really need to know how big the project is, what's your budget before you go in and do any kind of work on the house. And if let's say somebody wants to build an ADU, an accessory dwelling unit in their backyard, and their jurisdiction does allow for this type of housing to be constructed, what kind of experience do you have with ADU construction as far as things that they should watch out for when they're going through the process? Because I know from firsthand experience that the process does take a long time. You have to go through a lot of review and get neighbors to say okay and that sort of thing. So talk about that.
Correct. And I think, Debbie, you hit the nail on the head, no pun intended here, talking about renovation projects, is that getting the county or city you live in lined up permitting wise is going to be key to any lender. Lender's not going to want to lend on something that you can't build. An accessory dwelling unit, there are a lot of areas in the country that allow it, especially the closer you get into a city area. And Fannie Mae and FHA both recognize accessory dwelling units. The key to it from the lending perspective, also outside of the zoning and permitting process, would be making sure they're comparable sales for those properties. So if you're really trying to get top dollar on an appraisal, you'd want to make sure somebody has already built an accessory dwelling unit and also sold the property, or at the very least, the property had an existing one on there from a previous owner, and that property is also sold. Generally in the last 3 to 6 months, but some appraisers will go up to 12 months depending on the sales in that particular area.
Yeah, this is kind of a new field that's becoming more popular. I'm writing an article on multi-generational living, which would include ADUs and that sort of thing. But most jurisdictions are still not with it as far as adapting to allow this, although some states are getting in on the bandwagon and saying, hey, we really need to address this issue. So let's talk a little bit about getting the permits and how do you interview contractors? What does a lender look for from a contractor standpoint as far as credibility? And, you can't have your Uncle Fred do the work. It has to be somebody who's licensed, etc. Or unless Uncle Fred is licensed, I don't know. I'm not going to vouch for him. But anyway, I don't have any Uncle Freds in my family. So, but what does a lender look for when they are evaluating whether they're going to do a loan of any kind?
Sure. So from the contracting or contractor perspective, if you did a cash out refinance or home equity line of credit, the lender generally isn't going to look at anything because we're not basing the loan on the after improved value. But if you're talking about a home style loan or an FHA 203K or a construction or permanent loan, the lender is going to want to know about that contractor because we're basing our loan and the collateral or your home or the future value of your home on the work that contractor is going to do. Now, generally, a lender will say, we're going to make sure they look good on paper, but we're not going to evaluate the quality of their work. That's up to the homeowner. So what we're looking for is to make sure they're properly licensed, insured, and they also have some experience. And generally, most lenders are going to want to check a couple references that the contractor provides from prior customers of similar jobs. They want to have 2 to 5 years experience at the minimum. And sometimes that experience is cobbled together. So in other words, if somebody has been a general contractor for just a couple years, but maybe has 15, 20 years of experience working for another contractor, we're going to take that into account when we're evaluating the contractor. And what we want the contractor to do is fill out a form that goes through their history, gives us their references, their insurance information, and have the contractor fill that out. And then we also want to make sure the contractor understands the draw process for construction or home style loans or 203Ks, so they know when to expect their money and how that process is going to work as well.
Actually, while we're on that topic, that was one of my questions I was going to ask. Talk to the listeners about the drawdown process for each of these types of loans. I know, obviously, when you're doing new construction versus construction to perm, just talk about the drawdowns and making sure there are no mechanics liens left behind and the wording that a homeowner should use to make sure that a subcontractor has been paid if they do not, in fact, work for the general contractor.
Sure. So in the case of a renovation loan, 203K or home style, or a construction loan, the lender is going to want to have an inspection. A third-party inspector is going to go out and look at the property. Sometimes that's the same appraiser that appraised the property in the beginning. They're going to take some pictures generally for the lender and determine exactly how much of the project is done. That process starts usually with the contractor saying, hey, I have finished the foundation and I am framing right now. Can you send somebody out? And I want a foundation draw. And then we'll send somebody out. Sometimes when you get to a foundation draw, that'll also entail having a survey done to make sure the foundation rather is in the property lines. And then the appraiser will send out the report to the lender. At the same time, the lender will order, in a lot of states, a title bring down. And that's just to make sure none of the subcontractors or suppliers have placed a lien on the property during the course of construction for non-payment of your contractor. Once that is in, the lender will send out the money. Depending on the policy of the lender, it sometimes will go directly to the customer, the borrower, or it will go to the contractor. And sometimes the form of the payment is in a wire, and other times it's in a form of a two-party check made out to the homeowner and the contractor. All of these details a good lender will go over with you prior to settlement, so everybody understands exactly how payment is going to be received.
Good point. And I think too that the homeowner should make sure that if money is given to the general contractor to cover the cost of, I don't know, what, tiling a bathroom or what, cabinets for the kitchen, that they get some kind of verification saying that, yeah, the general contractor did pay the sub, so that later on down the road, he doesn't come back and say, well, I never got my money. There's all kinds of things that can go wrong. So one of the things I want to try to do on this show is to tell them how to do things right so that they can avoid issues that might come up.
Sure, absolutely, Debbie. And part of that title process is the title company will send out lien releases to the contractor at the very least, and any subcontractors that have given notice. And what that means is part of that permitting process is a determination of who the mortgage lien agent is going to be. So when a contractor pulls a permit, they will also see the mortgage lien agent. And when a subcontractor goes out, they'll see that same information, and they can give notice to the mortgage lien agent, generally it's the title company, and they'll say, hey, I have done X amount of dollar work to this property. I'm just giving you notice. So when it comes time to release that money from the lender, the mortgage lien agent reaches out to that subcontractor and sends them a written lien release saying, yes, if I receive X amount of dollars, that I'm not looking for this money anymore. And that's the way the lender protects itself and also the homeowner from anything going awry or wrong, as you said, in any kind of problems. It heads off a lot of problems by doing it the right way and making sure everybody's covered and everybody's paid.
Well, that explanation was very clean, crisp, easy to understand. So I appreciate you're doing that, because over the years, I've had so many people complain about whatever, and you find out that, well, they didn't even do it right to begin with because they didn't take the right steps to do it. Let's talk for a minute, though, about, let's say you're doing new home construction or a major big project where, like, you're adding on a second story so you can redo the first floor and include a master bedroom for an in-law suite or something big, big ticket item. What kind of credit scores, based on today's credit, would be the type of thing that somebody would have to have in order to get a loan of that size?
Sure. So a couple things. It really depends on the program. So if you're doing a permanent program, most lenders are going to want a minimum of 680, generally more than 700, and for a very large loan, maybe 720 plus on the credit scores. You can also achieve a project with a home style